Welcome, curious minds, to another deep dive. Today, we're digging into a real giant of the beauty industry, the Estée Lauder Companies. Last year, well, they faced what you could call a perfect storm. But instead of buckling, they're actually undertaking this radical transformation.
That's right.
So our mission today is really to unpack how a company known for luxury, rebuilds almost from the ground up. What drastic steps are they taking? And what does this huge shift mean for their famous brands? And, well, the future of prestige beauty itself.
Yeah.
We've gone through their latest annual report, the 10K, and the earnings call highlights to bring you the real story behind the numbers.
And that's so important because the beauty industry is, well, it's always changing, sometimes incredibly challenging.
Definitely.
So this deep dive should give you a really clear, structured look at how a global leader like Estée Lauder handles that kind of complexity. From sales dips to these major strategic shifts, it kind of reveals their roadmap for resilience.
Okay, let's cut right to the chase then. The top line figures for fiscal 2025. And buckle up, because it was quite something. Net sales took an 8% hit. They dropped from over $15.6 billion in fiscal 2024 down to just north of $14.3 billion.
Wow. Yeah.
But the real headline, their diluted net earnings per common share. It swung wildly from a positive $1.08 last year to a net loss of $3.15 this year.
A huge swing.
Yeah, this wasn't just a little stumble. It felt like a fundamental, rebalancing of the books.
But what's really compelling here, I think, is that even with that big sales drop and the net loss, their gross margin actually expanded.
Expanded? How?
Yeah, by 230 basis points up to 74.0%. And this was mainly driven by benefits from their profit recovery and growth plan. They call it PRGP, plus lower excess and obsolescence.
So less waste.
Exactly, wasting less product, and also strategic pricing moves. So it raises this really interesting question. How did they manage to boost margins when sales were clearly, in such a tough spot?
Right.
It really points to a sharp, almost aggressive focus on internal efficiencies and cost control.
Okay, but this is where the picture gets, complicated. Because despite that clever margin expansion, the operating margin still plunged into negative territory.
Yeah.
From a positive 6.2% down to negative 5.5%. I mean, that's a massive swing.
Yeah.
What's the story behind that shift from profit to loss?
It is a massive swing, and it's really a combination of strategic adjustments and some pretty heavy one-time impacts.
Okay.
Think of it like they had to take a really hard look at the value of some of their assets. This led to these impairment charges, basically writing down the value of things like goodwill and other intangibles. That totaled $815 million.
Wow. Okay.
Then you had charges linked to restructuring and other activities. That was another $362 million.
Right.
And a pretty notable $159 million charge tied to settling those talcum litigation agreements we might talk about later. So even their adjusted operating margin, which, tries to smooth out some of these one-offs, that also contracted down to 8.0%. So yeah, a lot of significant kind of non-recurring financial hits layered on top of the underlying operational changes.
Okay, so diving into cash flow from operations, we saw a noticeable decrease there too, down to $1.27 billion from $2.36 billion.
Yeah, that really reflects the lower pre-tax earnings, obviously, but also some unfavorable shifts in how they managed operating assets and liabilities. Things like increased payments for the restructuring.
Right. But on a more proactive note, it looks like they also made a strategic call to optimize capital spending. Capital expenditures decreased quite a bit to $602 million from $919 million.
Exactly. That signals much tighter control on, how and where they're spending money. Putting the brakes on a bit.
Makes sense.
And tying into that, it's probably worth mentioning the change in dividends paid out.
Ah, yes.
They went from $947 million in fiscal 24 down to $618 million in fiscal 25.
Big drop.
Yeah, and this reflects that decision they made back in the second quarter of fiscal 25 to cut the dividend to what they call a more appropriate payout ratio.
So a deliberate move.
Oh, definitely. A deliberate, maybe difficult move to hold on to cash amidst all these financial recalibrations and, free up capital for the big transformation effort.
Okay, so with all these financial shifts happening, what does this really signal for Estée Lauder's future? I mean, clearly the company is undergoing a major transformation.
Absolutely.
They've rolled out this expanded profit recovery and growth plan, the PRGP. The aim seems to be transforming their entire operating model.
That's the core of it.
And the goal is ambitious. Fund a return to sales growth in fiscal 2026, and then restore a solid double-digit adjusted operating margin over the next few years. They're saying most benefits expected by fiscal 2027. That's a bold target.
It really is. And this expanded PRGP, it focuses on three sort of critical areas designed to make them leaner, more competitive.
Okay, what are they?
So first, they're taking a much more competitive approach to procurement. That means, consolidating spending, reevaluating supplier relationships to drive pretty significant savings, basically getting smarter about what they buy and who they buy it from.
Right, tightening the belt.
Second, improving supply chain efficiencies. They're talking about a zero-waste approach and better demand forecasting to cut down on excess inventory.
Which hits those growth margins we talked about.
Directly impacts them, yeah. And third, they're strategically outsourcing some select services to proven global partners, leveraging outside expertise for things that aren't core business.
Okay.
So it's a really comprehensive effort to streamline and, optimize their entire operational footprint.
And, well, as with any huge corporate overhaul like this, there's a human cost involved. Part of this transformation includes a pretty substantial restructuring program within that PRGP.
That's often the case.
They're looking at an estimated net reduction of about 5,800 to 7,000 positions globally.
That's significant.
It really is. That's roughly 9% to 11% of their whole workforce as of June 30, 2023.
Wow.
I mean, that's an incredibly tough decision, but it just underscores the scale of this restructuring.
Yeah.
And the charges just for that part are estimated at $1.2 billion to $1.6 billion before taxes. How does a company like Estée Lauder even navigate such a large-scale workforce reduction while trying to, maintain morale and protect their brand image?
Well, it's an immense challenge, no question. It requires really careful communication and support, though, the reports don't detail that aspect specifically.
Right.
But strategically, adding to that internal restructuring, there's also this significant reorganization of their geographic regions. That's going to take effect in fiscal 2026.
Okay, so changing that internally.
Exactly. They're consolidating into 4 new regions. The Americas stays pretty similar, North America and Latin America.
Got it.
Then there's a new one, Europe, the United Kingdom, and Ireland and emerging markets, or EUCOM. Bit of a mouthful. That'll include the former EMEA markets, but not global travel retail. And it brings in Southeast Asian emerging markets like Indonesia, Malaysia, the Philippines, Thailand, Vietnam.
Interesting grouping.
Then Asia Pacific, which will now cover Japan, Korea, Hong Kong, SAR, Australia. And it takes on their global travel retail business, which used to sit under EMEA.
So travel retail moves to Asia Pacific.
Correct. And finally, mainland China gets reported as its own separate region now.
Wow. Okay. That really highlights its strategic importance, doesn't it?
Absolutely. It underscores just how critical that market is.
So that's a huge restructuring of their global map, really aiming for, I guess, a leaner, more agile organization.
That seems to be the goal.
And with that massive global realignment happening, how does Estée Lauder's presence all over the world shape their actual brand strategy?
Well, Estée Lauder really positions itself as a steward for over 20 luxury and prestige brands globally.
Yeah, it's a huge portfolio.
Sold in about 150 countries. And they use that dual distribution strategy. So wholesale channels, think department stores, duty-free shops, e-commerce partners, and also direct-to-consumer, like their own freestanding stores and brand websites. It gives them a really broad reach.
Right.
But what's really compelling, I think, is how they strategically differentiate all those brands. They categorize them by lifestyle and price point.
Oh, okay.
It lets them cater to diverse tastes and capture different market segments without, stepping on their own toes too much.
Makes sense. Can you give some examples?
Sure. So at the top, you've got the luxury brands, La Mer, Jo Malone London, Tom Ford, Le Labo, real pinnacles of prestige.
The heavy hitters?
Exactly. Then you have their large brands, Estée Lauder itself, Clinique, MAC. These are just massive global players with huge reach.
Right, household names and beauty.
Then moving down slightly, they have scaling brands. Think The Ordinary, Aveda, Bobbi Brown Cosmetics. This shows they're agile, bringing in newer high-growth concepts.
Yeah, The Ordinary's growth has been huge.
It really has. And finally, developing brands, which include names like Too Faced, Dr. Jart+, Origins, Bumble, and Bumble. These are positioned as like future growth engines.
So a very structured portfolio.
Yeah, it's a deliberate structure allowing them to cover a wide range of consumers and market needs.
Yeah, this next point, I think, really highlights their strategic success, even amid all the challenges we've discussed.
Okay.
The company actually managed to achieve prestige beauty share gains in some key markets during fiscal 2025.
Oh, interesting.
Where? Mainland China and Japan specifically. And they saw a significant improvement in the U.S. during the second half of the year.
That's quite something given the overall picture.
It is. And their big brands like Estée Lauder, La Mer, Jo Malone London, they ranked really strongly, often number 1 or 2 in those key mainland China shopping festivals, like 11.11 and 618, across different platforms. MAC even ranked #1 in artistry makeup on Douyin.
Wow.
So that's a pretty strong testament to their brand power, isn't it? Even in a really tough year.
Absolutely. And their commitment to innovation is obviously still there, constantly refreshing the portfolio.
Yeah. What kind of innovations are we seeing?
Well, they've launched some breakthrough products, things like extensions of really beloved franchises, Estée Lauder, Renutriv, Ultimate Diamond Age Reversal Eye Creme, La Mer, the new balancing treatment lotion, building on what already works.
Smart.
They're also targeting specific usage occasions, like La Mer, the night recovery concentrate for nighttime skincare routines. And in terms of capturing trends, you see releases like the MAC Nudes collection or Le Labo Eucalyptus 20. Shows they're watching what consumers want.
Right, staying relevant.
And critically, I think they're using strategic pricing for new consumer acquisition. Products like Clinique Moisture Surge, Active Glow Serum, or the Ordinary GF 15% solution offer, new entry points for consumers into their brands.
Good point. Making luxury accessible, maybe?
Or at least offering different tiers, yeah.
They've also been really active in expanding their consumer coverage, just meeting customers wherever they happen to be shopping.
Like where?
Well, they launched 8 brands in Amazon's U.S. premium beauty store in fiscal 2025, including Aveda and Origins, and 3 brands up on Amazon.ca, including Clinique.
Okay, embracing Amazon.
Seems like it. Plus, online expansion in Southeast Asia was pretty robust. They had 14 new stores on Shopee, 4 on TikTok Shop.
Wow, TikTok Shop too.
Yeah. And Le Labo specifically really expanded its physical footprint, 92 points of distribution, including big flagship stores in Beijing and Seoul. So it's a real omni-channel push.
And to fuel all that growth and innovation, they've strategically funded consumer-facing investments. They actually increased them by about 400 basis points as a percentage of sales in fiscal 25.
That's a significant boost.
It is. And importantly, these investments were funded by net benefits coming out of those PRGP initiatives, the cost savings in non-consumer-facing areas.
Ah, so taking money saved from operations and putting it straight into marketing and sales drivers.
Basically, yeah. Reinvesting the savings. And they're also investing heavily in technology. They opened a new biotech hub in Belgium back in December 2024.
Right.
And they set up a collaboration with MIT, Massachusetts Institute of Technology, in January 2025. That's aimed at accelerating their sort of cutting-edge biotechnology innovations.
So a dual strategy then. Market expansion and tech advancement for future efficiency and products.
Exactly. Playing both offense and defense in a way.
Of course, no year's completely smooth sailing, and Estée Lauder definitely faced some significant headwinds, particularly those substantial impairment charges we touched on earlier.
Right, the write-downs.
Let's maybe delve just a bit deeper into what those really meant for the brands involved.
Okay, sure. Yeah, the impairment charges they recorded in fiscal 25 were pretty impactful. For Tom Ford, for instance, there was a $773 million trademark impairment. And for Too Faced, $75 million on the trademark, plus another $13 million on goodwill.
Ouch. Well,
primarily due to lower than expected growth in key regions and channels. Think mainland China and Asia travel retail for Tom Ford. That, combined with increases in the weighted average cost of capital, just, the financial environment, essentially they had to reevaluate the expected future value or earning power of those brands.
Okay, so future expectations adjusted downwards.
Yeah.
What about Dr. Jart Plus Lee?
Yeah, Dr. Jart Plus also took a hit. They recorded an $83 million trademark impairment and a pretty large $292 million customer list impairment back in April 2025.
And the reason there?
Similar story. Lower than expected growth, specifically flagged in mainland China and Korea for that one.
Right.
And it's worth remembering Dr. Jart Plus had already taken charges back in fiscal 24 related to exiting the travel retail channel. So that brand has faced, multiple reevaluations recently.
Got it. And what about the talcum litigation settlement agreements? That also had a notable financial impact. Probably grabbed some headlines.
That's right. There was a charge of $159 million recorded in the first quarter of fiscal 25, specifically for those settlements.
Okay. And what did that cover?
Well, it covered resolving over 200 pending cosmetic talcum powder cases with certain plaintiff law firms.
Right.
And importantly, it also set up a process for resolving potential future claims expected between 2025 and 2029 with annual capped amounts.
Ah, so trying to put a box around the risk.
Exactly. It's a proactive measure, and it significantly reduced the number of pending individual cases, dropped from 273 a year prior down to 84 as of June 30, 2025. So a strategic move to contain and manage a very specific and potentially costly legal risk.
Okay, let's shift gears slightly and discuss the company's foundational structure. It's quite unique, isn't it? What does it really mean that the Lauder family controls approximately 84% of the outstanding voting power?
Yeah, that's a key feature. It essentially means Estée Lauder is classified as a controlled company under the New York Stock Exchange rules.
And what does that allow them to do?
Well, that designation gives them exemptions from certain corporate governance requirements that other listed companies usually have to follow.
Like what?
For example, they don't need to have a majority of independent directors on their board, nor do they need entirely independent nominating and compensation committees.
Interesting.
And currently, there are 4 Lauder family members on the board of directors, and one of them is also an executive officer.
So what are the implications of that kind of ownership structure, do you think, for strategy, long-term vision?
Well, it certainly raises an interesting question. It suggests a very strong, centralized decision-making process, deeply rooted in the family's legacy. That can be a real advantage, in terms of maintaining a consistent vision over the long term.
Yeah.
But it could also be an area people watch closely regarding independent oversight and governance practices. It's just a different model than many large public companies.
Right. Okay, on the capital allocation front, they have this ongoing share repurchase program authorized for up to 256 million shares, no expiration date. However, it seems like repurchases under that publicly announced program have actually been suspended since way back in December 2022.
Yeah, they paused it.
And in fiscal 2025, they only repurchased shares needed to satisfy employee tax withholding obligations.
Right. Minimal activity there.
And more recently, just on August 19th, 2025, they declared a dividend of 35 cents per share. So again, it sort of speaks to maybe a conservative approach to cash management right now.
I think that's fair. Holding on to cash, focusing it on the transformation and managing debt seems to be the priority over large buybacks or big dividend hikes at the moment.
Makes sense.
And looking at the broader picture, the forward-looking outlook for fiscal 2026, while they're anticipating continued volatility and uncertainty in the market, no big surprises there.
Yeah, seems to be the theme everywhere.
Global prestige beauty growth itself is forecasted somewhere between 2% and 3%. So, modest growth expected for the industry overall.
Okay. What about their key markets?
Well, they are seeing some early signs of stabilization in mainland China. They expect a return to mid-single-digit growth there, which is obviously crucial for them.
Definitely. And travel retail, that's been a tough spot.
Yeah, the global travel retail business is also expected to return to modest growth, sort of at the midpoint of their outlook range. They expect improvements in shipments, particularly in the first half of fiscal 2026.
So some cautious optimism there.
Cautious optimism, yeah. But on the flip side, they're also bracing for about a $100 million unfavorable hit to profitability just from currently enacted incremental tariffs.
Ah, okay. So, yeah, a real mixed bag of opportunities and challenges still ahead.
Exactly.
What stands out for you regarding their approach to technology and cybersecurity?
Yeah.
Especially given how crucial digital platforms are in beauty now.
Well, what immediately comes to mind is their ongoing investments in AI and new analytical capabilities.
Right. We touched on the MIT collaboration.
Exactly. And that's really aimed at getting better visibility into consumer trends, improving how quickly they can develop relevant products. That's essential now.
Absolutely.
And on the cybersecurity side, it sounds like they have a pretty robust program. It's led by their Chief Information Security Officer, the CISO. This apparently includes regular updates to the audit committee, comprehensive security policies, mandatory employee training, which is key, and reviews of third-party risks. Plus, importantly, well-defined incident response plans.
Which you absolutely need today.
You absolutely do. Data breaches can just devastate brand trust, especially in luxury.
Yeah, good point. And of course, as a huge global company, they acknowledge this wide range of risks. They're constantly monitoring currency swings, inflation, supply chain issues, social, political factors, geopolitical tensions.
The whole landscape.
It's a complex world to operate in, for sure.
No doubt about it.
So as we kind of wrap up this deep dive, it feels pretty clear that while fiscal 2025 threw some significant challenges at Estée Lauder,
Definitely a tough year.
the company is really executing a comprehensive, I'd even say radical, strategic plan to adapt, to streamline, and crucially, to invest for future growth.
Yeah, the PRGP is ambitious.
It really is.
Yeah.
That plan and their continued focus on brand innovation, they really stand out as they pivot towards what seems like a leaner, more focused future.
Absolutely. Which leads to maybe a final thought for you to consider.
Okay.
Considering Estée Lauder's very long history and these fundamental shifts happening in consumer behavior in global markets, how will their deep-rooted, high-touch marketing philosophy, that personal connection, how will that evolve to truly connect with the digitally native global consumer of tomorrow, while still somehow maintaining the prestige and luxury essence across that really diverse brand portfolio?
That is a fascinating question to ponder. How does high touch translate effectively online at scale while still feeling special?
Exactly.
Well, thank you for joining us for this deep dive into Estée Lauder's strategic transformations and their outlook. We hope you found it insightful, and we encourage you to keep exploring these fascinating intersections of business, branding, and global dynamics.